Question 2, so reference to other matters only paragraph. I need to discuss 2 ethical concerns with Paul Pogge's actions in terms of the CPC, not to discuss any safeguards. So again, Paul Pogge, I know, is a CASA in business, so I would be looking at part 2 of the CPC. Let's go to other matters first. So I come to my other matters and I'm looking for any concerns I have noted in this paragraph as a result of Paul Pogge's actions. And here I can see I've got CPC, CASA, I've got a self-interest threat because of accounting, I've got an intimidation threat because of accounting, and I've got here integrity questioning. So I can already see I've picked up the areas in the CPC that are going to be a concern with his actions. What did he do? He has asked someone, so he has pressured someone to account for the capital expenses in the process of manufacture as repairs to get the tax deduction immediately instead of over a 6-year period. So I've got pressure to get somebody else to act fraudulently. I've got now integrity concern being associated with a tax return, which is actually false, and this specific section dealing with accounting itself. Okay, so if we go to part 2, we'll be able to see all the relevant sections. So first section, preparation and presentation of information, self-interest, intimidation, or other threats to compliance with the fundamental principles. And that can happen where? The professional accountant shall not exercise such discretion with the intention of misleading others or influencing contractual or regulatory outcomes inappropriately. So what are examples as to when he will use his discretion? It's your estimates, your policies, and so on. Relying on the work of others, we're not looking, addressing information that is or might be. When a professional accountant knows or has reason to believe information with which the accountant is associated is misleading, the professional accountant shall take appropriate actions to seek to resolve the matter. And then these are your safeguards. Okay, so we don't actually even go into the specific scenario as to these are the specific threats. All we have seen up front is that there's self-interest or intimidation threats if you're associating yourself with false or misleading information and you are aware of that. I don't need to give the safeguards because the question has said so I can move on. Then we've also got other considerations, and we've got the concern here if there is pressure. Then we need to look at section 270. So let's go to 270. Section 270, pressure to breach the fundamental principles. So professional accountant might create an intimidation threat to compliance with fundamental principles if you are doing that. So we shall not allow pressure from others to result in a breach of compliance with the fundamental principles or place the pressure on others, which is the case here. If there is pressure to influence the preparation or presentation of financial information, this is where we have got the threats to the fundamental principles. Okay, evaluating the level of the threat and then discussing the safeguards we don't need to do here per this required. So I'm just going to address those. And then I just want to take you to your fundamental principle of integrity. Professional accountants shall not knowingly be associated with reports or returns that they believe contain materially false or misleading statements were provided recklessly or omits or obscures information. So I'm going to bring in this specific requirement of non-compliance with the fundamental principle of integrity. So I'm doing question 2, and I'm going to state what has happened first. So I'm going to say, Paul Pogger, CASA, is required to comply with the CPC parts 1 and 2, CA in business. Okay, then I'm going to say Paul Pogger should not associate himself with preparation of information that is misleading or false. And then I'm saying Paul Pogger has requested the accountant to reflect the capital enhancements as repairs fully deductible in the tax return. Therefore, there is a self-interest threat or intimidation to integrity. Then I'm going to say a CA SA in business should not pressure anyone to mislead or to act unlawfully. Paul Pogger requested the accountant to mislead the tax return. Therefore, there is intimidation threat to integrity. And then I'm going to say, per the CPC, a CASA should not knowingly be associated with returns that are misleading or delivered recklessly. I'll say Paul Pogger is the FD and therefore will be associated with a fraudulent tax return. So I've got 3 different areas in the CPC that I'm addressing, but linking them all to the same action of misleading the tax return. Let's go and have a look at the solution.